Well, hello, fellow investors and traders. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets. We do it from a neoclassical perspective, always asking ourselves what happened last week, what does it tell us about the coming ones. I do the show every Sunday evening broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, reach up in the right-hand corner, subscribe. Anytime content's pushed, you get notification. It's free, it's easy, it's fast, keeps you up to date with what's going on in these markets. And if you have followed me for any length of time, you know that the neoclassical model that I've created does a pretty good job of tracking supply and demand on the charts, giving us clues as to what comes next. As far as what does come next, it is 2016. The beginning of another year, and we leave the one we just had behind. That year, up and down, all year long, sideways consolidation for the entire year. The NASDAQ did eke out about a 5% gain, but you had almost as much of a loss on the Russell. S&P and the Dow also in negative territory on the year. So unlike years past, down market. It's been since 2011 since we've seen that, and of course since 2008 and 9 since we've seen some major losses. As far as what's next, let's first talk about what's next here at TA today. If you push on the Get Started button, I want to bring your attention to a huge sell that we have going on. We've changed the subscription model to create a package that I don't think you can pass up, and that is you get all the services and tools for $19 a month, $175, less than $15 a month if you subscribe for a year. Check it out at TA today. Come over, look at what we're doing. Folks, we've decided that we're going to push to the next frontier. We're going to take price and eliminate that as a constraint for all you viewers out there. So if you want to get in on a subscription model, on a model that does very well in an up, down, sideways market, then come over and check this out. It's pretty easy to find it. Just come to TA today, click the Get Started, and you'll see what's out there for you. Let's get to the charts. Let's talk about what's happening and what should happen in the coming days. We'll start here with the S&P. So as a new year comes in, a lot of times you get a lot of volatility coming in at the beginning of the year. If you look at what happened last week, you really had nothing, right? You had some up to start the week, you had some down to finish the week, and it was just like the rest of the year. The rest of the year was a lot of up, a lot of down all year long, and that never did change, right? All year long, you had the same thing going on, and last week was simply a microcosm of that. And so if we want to look at what's really going on, let's pull it back to a weekly view and see what we have there. And what we really have there to start out the year are some fairly clearly defined areas. You've got a range here, and you got a range above it, and whichever one of those ranges breaks is going to be the key. And what I mean by that is if we're going to get a sustained move, it's going to come on a break of this to the top side, or it's going to come a break of this area to the bottom side. And that's where the larger move is going to come this year. Now, I'm not talking about this week. I'm talking about this year. What's going to lead us to the next decision is you're about halfway in between. You got about 60 points up above you to get to this little area here, which is the swing point. Well, it's not the swing point. This was the breakdown bar. So if I come across and draw a line across this area, right, using this particular price point, this bar, that was where things broke down. That price point bar, that was the big breakdown bar. And as you see, when we come up to test it, that's where all the sellers are. To get over that price point bar, that's going to lead probably to a test of these swing point highs and give you some sort of a breakout scenario. That's about 60 points to the top side right now. On the back side, this high volume low here, which is the top of this bar, That's the demarcation between the top zone and the bottom zone. If you get back down into this area and stay there, you're going to try to go to the bottom. And so that's the larger move to the downside, and that's about 50 to 60 points to the downside. And so you're almost smack dab here in the middle, right, looking to either break it higher or break it lower, and that's going to be the next larger move. And so when you look at charts, that's what you want to be looking at, and that's how you want to be thinking about these markets. If we pull it back one more level to a monthly chart, here you can kind of see a larger dynamic of that big range. If we do the range here, and then up underneath it, right, if you do the next range up underneath it, that would take you down into this little congestion area here. And so the key on the longer term time frame, of course, is to stay in that higher range. And that higher range would keep you above these two swing point lows. And also note that this low here will print. It's already 4 bars in 2 more months. So by March, if we haven't tested that, that will print as a swing point low as well. And if it does, folks, that's going to give you 2 swing point lows very close to each other in price. In other words, this would be at 1867. That one would be at 1820. So roughly about 47, 50 points between them. That would be a huge break if it were to eventually break to the downside. Of course, that's a ways off. We're still way above that price level. 1867, we're trading at 2043. So let's deal with first things first. You don't have to know where we're going 6 months from now. What you need to know is where you're going over the next week or 2 or 3 or 4. And that's about as far as you can take it with any degree of respectability in being correct in your calls. That's the S&P 500. NASDAQ, a little stronger. So if we bring up the NASDAQ and look at it, put it on a weekly, you can see it's up here. The breakdown bar is high. It got over it. It's still dealing with it though. Price point there is 50.92, still dealing with that area. Of course, if this were to break to the top side, I suspect that would drag the S&P back up there to test again, and then that would be the key area. Price point on the high, 5231.94, and that's about 200 plus points to the top side. Now, on the opposite view is the Russell, right? The Russell has been the weakling all year long, still is. Usually the Russell outperforms this time of the year. It is outperforming slightly, but it was so negative compared to the rest of the market that outperformance really doesn't mean anything yet. I mean, it's not significant. You kind of have 2 ranges going on here. You have this top range up above. You have this one that we're in now. The key is do not watch or do not wait to see this thing break if it does. If you break these lows, right, well, there's a hammer bar here. The hammer bar went under this big bars candle test at the bottom. You break that low, you're going lower. And so that's the key price point. Price point there, 1102. On the top side, it's up here. The price point up there is 1203. You're trading at 1135. So you got about 33 points to the downside, and you got a good 60, 70 to get up and try to break into the higher range. So if you're watching, if the market's weak, you watch the weak. You see how they performed. How do they trade to the downside? On the strong side, you watch the strong. You see how they trade, and you try to see, can they lead the rest of the market higher? So a huge demarcation in strength or relative strength across these indexes. Russell the worst, S&P the middle, NASDAQ the best. Of course, the NDX inside the NASDAQ. If we look overseas, popping over there, a lot of people have been thinking that the emerging markets are the place to be focused. I think the emerging markets certainly important, but the real importance to me is in Europe and is in the major 2 markets in Asia, that being the Hong Kong and the Chinese market. Japan potentially could become more important, but I believe these are the key markets. So the DAX, the CAX, the Chinese market in terms of the Hong Kong and mainland China, Shanghai. If we look at the DAX, and I've got it on a weekly, now the DAX had traded lower. QE, of course, is the story over here. That QE expectation ran this market much higher last year. You get the actual QE and it trades off. You get the continuation trade that brings it back into these lows. Big pop up, a little bit of a juice down, right, on the weekly. If we want to divide this out like we do elsewhere in terms of ranges, the ranges here are fairly clearly marked. You kind of got this range, and then you've got the top range right up above it. And that is where this is trading at this particular point in time. And so when I look at the DAX and I look at how this is set up, this is the key area. Right off the bat here this year, we're going to find out, is it going to try to trade back to the top of the range or back into the lows? And it's a battle. It's a battle right now in this area. If I look at it and ask which way is it going to trade, well, you've already tested the lows. Looks to me like you've already put in a lower low. Looks as if this is going to try to test this top at least. Gets over it, it's going back up to test the highs. You got swing point highs here and here. If it takes two more weeks to get up to that high, you'd have another swing point there as well. If you pull this one back and look at it on a monthly basis, and let's grab the monthly chart, you can see it's a large range at the top. That came right back in. It tested into the support zone that the NeoTA charts are showing you. Tested into it. It's up in the resistance zone now. It's a big range, top to bottom. It's a big range from roughly here up. And that range, if you project it down, in other words, if this does start to break down, that range takes you back down into this big breakdown bar and that swing point high here that was broken. So I suspect the DAX is going to hold the top area, but if you do get the breakdown, this could turn ugly. Pretty bad, right? That swing point low breaks, everything really would kind of go to heck. So big move up, still a continuation, consolidation up there at this point, and I think you have to respect it to potentially go higher. On the CAX, it's kind of the same story. If you pull it back, you get almost the same looking picture. It was the stronger of the two all along. Is still on a monthly basis a little bit stronger, but the DAX is becoming the go-to market, the market to watch. If we look over at Hong Kong, it's a different story. We had a sell-off here that took us to basically we broke and made an intermediate term low, got under, back over, came back down to test and held. That's a good story, but what you need now is you need to push back up. That push back up is going to have to get over this swing point high to really get anything going. That's about 23.4. You're sitting at 21.9. And so a big move would be needed here. You could see an ABCD structure come into place if that was going to occur, and could get a decent size move back to the upside if it plays out that way. But it's got a ways to go to even try to get back into this higher range. And the range I'm talking about is you've got a range down here and a range at the top. It's in the lower half of it. If the ABCD structure plays out, you'd have a larger move to the upside. But that's a big if, because if you pull this back and look at it on a monthly basis, this has trend transitioned. And trend transitions in most markets do not happen very often on the monthly time frame. And so a monthly time frame trend transition to sideways usually portends that this market has topped out and potentially is heading lower. So we have to keep in the back of our mind that Asia is the weak link in the global markets, and if it starts to break down farther, that probably is going to portend more problems for the rest of these markets. So that's Asia from Hong Kong view. If we pull over and look at Shanghai, the Chinese market on the mainland had a huge run up, and when we're talking about a massive run up, if we put it on the monthly chart, a massive run up. Went from 20 all the way up to 51. So you did about 150% move up in less than roughly a year. And then you came crashing down off of that. But you came right back into where you should, which is the swing point high. 28.27 was that number. Gets down to 28.51 and almost test into that high. Gets its bounce. And now the question is which way it goes from here. Now, if everything were equal, what you would expect is you would expect the move down, right? The move back up, right? Potentially to about that price point there, and then the continuation move back to the downside. That price point I'm looking at, about 4,000. If you take the highs low, is about 38.47. So somewhere in between 38.50, 38.47. This thing got as high as 36. So it's almost to that price point. That's going to be the key area on the way back up in the Shanghai market. So Asia, still the weak link. Europe, they're the wild card in terms of the QE and how they perform. US, a little bit more mixed. You got strong, you got weak, you got people don't know where to go, and it's not clear which way that's going to sway. Now, if I had to tell you, overall, where do I think things are going to go, I'd have to reach over to the currencies and say the currencies are probably going to lead this market one way or another, up or down. And so let's take a quick look at the currencies and just see what they look like on a long-term picture. I'll pull up the dollar to start with. Using the UUP here, I'm going to pull it straight to a monthly chart and look at the monthly. Let me get it printed correctly so we can see it better. There we go. On the monthly basis, big move up. If you're a classical TA type guy, what you're looking at here is a flag formation. So you have kind of a flag after essentially a handle, right? A kind of a flag pole. And so you kind of have this flag thing going on, and usually that breaks to the upside eventually. That's the classical TA. If we look at it from a neoclassical, we're looking at a nice big spike high, right? Volume was a little bit heavier there than it was everywhere else. So you get a spike high, and after you get that spike high, you essentially set up a range. And that range now has played out, found a bottom, and is playing out inside the range. It doesn't mean much of anything until the range breaks, either to the upside or the downside. I suspect you got this consolidation, eventual breakout. And so that's the side you'd be watching. Now, if it does break out, that's going to make the euro cheaper. That's going to probably be a result of more QE in Europe, which would probably drive the European markets higher and probably take the U.S. markets with them to some extent, depending on how far and how fast the UUP moves, because that, you get the good and the bad together there. You get the QE happening in Europe, but you get the bad in that the dollar ascends, and that attenuation or that ascent is going to end up costing U.S. Companies profits. It's going to take away from their bottom line. So that's going to be the wild card. If we look at the FXE, pull this one back, put it on a monthly, you can see it's the exact opposite, continuation potential to the downside. And even though I didn't look at Japan proper, if we look at the Japanese currency, it looks a little bit different in that it's range trading and trying to push back up. And it potentially can make it all the way back up to these swing point lows. I'm a little more wary of the yen moving higher than I am the euro. I suspect the euro isn't going to be able to go much higher. Yen probably could get a decent bounce still. So that's the breakdown. I mean, we can talk about other things, but I'm going to keep the show at a reasonable length here tonight. And I want to remind you one more time, if you haven't looked at us before, or you have, and you've decided that, I just can't afford this kind of expense, click the Get Started button, come in here. We've got an amazing price point to get you started, $19 a month, folks. I don't know that you can get that price anywhere, and I know that you can't get the neoclassical tools anywhere for any price other than here. Have a great night. Let's have a great year. Take care, and I'll see you tomorrow. Good night, folks.